Partnership distribution. In this, we are looking at disproportionate distribution of hot assets. Disproportionate distribution means distribution which is not in proportion to the partner's partnership interest on his shares in the partnership firm. So suppose a partner owns 40%, but he gets the asset which is more than 40%. That is a distribution disproportion of the asset. Hot assets. They are inventory and unrealized receivables. Unrealized receivables will include your Section 1245 and 1250 recapture, which is your depreciation recapture in which we did in federal taxation of property. Inventory includes everything except cash, capital assets, and Section 1231 assets. Inventory is considered to be hot assets if its FMV is greater than 120% of the adjusted basis of inventories. So if your adjusted basis of inventory is 1000, if your FMV is greater than 120% of 1000, which is 1200, then it is considered as hot asset. What will be the extent of gain? FMV is the asset that the partner receives. The adjusted basis of what he gives up is your gain. Similarly, for the partnership firm, the gain will be equal to FMV of the assets foregone, things which the partner had a share in, but was not distributed to a FM of such assets. The adjusted basis of what was actually given to the partner in excess of its share. Section 754. Adjustment which made to the basis of the partnership property. This is an optional adjustment. It is not mandatory. So if the partnership firm want, they can adjust the basis of the partnership property when one partner leaves or sells his interest in the firm. When this partnership property is distributed, the basis of the remaining partnership property is adjusted for all the partners. So whatever is distributed is fine, but whatever is remaining, that will be adjusted. You will increase it. If the distributive partner, the partner who is receiving the property, is recognizing the gain, then the amount of gain which is recognized by the partner, that will increase the basis of the property. The excess of partnership's basis in the property distributed over the basis of the property in the hands of a distributive partner. So the partnership basis is higher. By that much amount, you will increase the basis of the undistributed property. Similarly, by the amount of loss, you will decrease the basis. Sales and terminations. When the partner sells his share, so his partnership is terminated. Partnerships is not shares and all that. When a partner decides to leave, he can sell his interest and just go out of it. So sale of the partnership interest. When a partner sells his interest, he will receive something return for it. At that time, he will record his gain or loss depending upon his basis and what he gets. He will record his gain or loss. So a partner's basis in the firm, it's called the outside basis. So he will compare his outside basis with what he receives, and then based on that, he will calculate his gain or loss. Now, if what he receives consists of any hot assets, any assets which generate ordinary income, to that extent, his gain will also be ordinary income. So if there are any hot assets in the partnership, then to that extent, his gain will be ordinary income or ordinary loss instead of capital gains. So for the partner, when he sells it, his tax year, his partnership year will close on that time itself. So if the partner sells his interest in March and the partnership year ends in June for this partner, the partnership year ends in March itself. So when he liquidates his entire interest, he is not continuing with the firm. Then his tax years ends at that point where he is liquidated. It does not become a complete tax year. His share of income and everything is calculated up till the point that he is selling his share. Now whenever a partner sells his share, whatever he receives to do that, you have to add the liabilities of the firm which belong to him. Now remember, partnership has unlimited liability. So if he is selling his share, he is getting rid of the liabilities also. So his share of the liabilities should be added to the amount that he receives. If the firm has hot assets which is unrealized receivables and your inventory, To the extent of these hot assets, the income or the portion of the sale proceeds will belong to that also. So, to that extent, it will be considered as an ordinary gain. More than that, it will become your capital gain. So, to that extent, to hot assets, it is ordinary gain, because if the partner would have continued with the firm, he would have made ordinary income or inventory and receivables. But because he is quitting, any profit he makes, everything cannot be treated as capital gains. A part of it is still treated as ordinary gains, the part which belongs to the hot assets. Hot assets taxed to the extent of hot assets gain, taxed as ordinary. For the extent of collectibles, taxed at 28%. 1250 assets. Any unrecaptured depreciation taxed at 25%. Everything else capital gains. Now, if Section 754 is elected, on distribution, the partnership may decide to adjust the basis of the partnership property. So, any adjustment they can make the partnership property if they choose Section 754. Now, the basis of the partnership property to the transferee, who gets the property basically, will be increased by the excess of the basis over the share or decreased by the excess of the share over the basis. Example: assume X sells his 40% of his share to Z for 80,000 and the partnership balance sheet reflects the following. So X owns 40%, sells to Z for 80,000. Balance sheet they have given for the company. Adjusted basis for accounts receivable 0. FMV for accounts receivable 100,000. Adjusted basis for real property 30,000. FMV for real property 100,000. Capital: X 40%, 80,000. Y 60%, 120,000. Now, what will be Z's basis on the partnership firm? He paid 80,000, so his basis is 80%. He gets 40% share, and his basis 80,000. Now remember, this is not GAAP. We are not calculating partner's capital account, his retirement when a new partner joins in and all that. Gain ration sacrificing ratio we are not doing. This is IRS. So, Z paid 80,000 to buy his share, so his basis becomes 80,000. Now what's his basis in the partnership? Property. So Z's basis, his outside basis is 80,000. Now his basis in partnership property, he owns 40% of 30,000 is equal to 12,000. So Z's outside basis is 80,000, but his inside basis is only 12,000. Why? Because basis of the real property is 30,000, out of which 40% is his. Now, if the partnership firm chooses Section 754, which means decides to adjust the basis of the asset, brings up the basis of the asset for the new partner, then how much will be the basis of the asset? For the new partner, it becomes 68,000 increase. That is 80,000 minus 12,000. If he had paid 68,000, 80,000, his assets should be 80,000. So, for the benefit of Z, it will increase the basis of its asset by 68,000. The basis of the receivables will increase from 0 to 40,000. So, the entire thing will go to Z. Why 40,000? FMV of your receivables is 100,000. FMV of the receivable is 100,000. The FMV of the real property is also 100,000, but this 68,000 basis increase. The real property basis will increase by 68,000 and receivable will increase by 40,000, and all the adjustment will be allocated to Z, the new partner. Now, whenever the receivables are collected, this is for a cash basis taxpayer. So, for the real property, basis increases by 68,000. For accounts receivable, basis increases by 40,000. Why 40,000? 40% of my FMV. Now, when the entire 40,000 will be allocated to Z, nothing to the old partner. Why? So, when AR is collected, what will happen? Y's basis in AR is 0. And if you have collected the entire amount, 60,000, Y's percentage is 60%. So the entire 60,000 will be gain. Taxable income for Y, the entire 60,000. Now let's look at Z. Z's basis is AR minus 40,000. Collected 40,000. So gain is 0. Gain for Y is 60,000 and they collect the AR.